Good morning, everyone. This is Brad Matheny. This is a quick little update regarding the markets and the deep selling we've seen this morning. You can see again, Nasdaq is down 50, half a percent. S&P is down half a percent. Dow Jones is down about 0.2%, a little over, a little under actually, 0.17. And we're getting some weakness overseas as well. Bitcoin is holding up okay. Dollar is 106 roughly. And we're getting gold is starting to base a little bit and try to move a little higher. We'll take a look at some of these, but you know if you follow my research, you know that I work with these cycle patterns and try to develop predictive technology, right? You've seen these in the morning. This is my SPY cycle patterns. This is my gold cycle patterns for today. We're looking at a temporary bottom set up in gold, looking for a gap potential tomorrow. So we would be looking for gold and silver here on this chart to move into a nice basing bottoming mode. We're already getting that big breakaway in gold, looking very positive right now. And again, I try to talk about the markets in a way that you guys can relate to them, like Bitcoin over here, breaking higher, needing to reconfirm. And here we go. We get the big breakaway. This is all in solid trending to the upside. As I mentioned to you, in order for us to see any weakness, we need to see Bitcoin to come all the way down here to 91,350 roughly and try to break this level until we set a new level up here. But one of the things that I do, well, a lot of things that you guys don't actually see, is the coding work and the programming work that I do outside of the videos that I share with you. So I'm going to show you something now. You've probably heard me talk about it a little bit. This is my what's called ADL, Adaptive Dynamic Learning Predictive Modeling System. And I did this just before the election. So you can see the date here is November 2nd, 2024. This is a weekly ADL chart. So this is going to be basically weekly price data. And you can see that the XLV had indicated that we were going to potentially move down into this 145, 144 area down in this area. And then we had a very strong chance of rallying back up into roughly this 160, 162 area. The adaptive dynamic learning system is a predictive modeling system that I built that's rather unique. Without telling you proprietarily what it does, just understand that it attempts to map out unique price and technical data into an inference data set that is then used by the inference engine, a built-in lookup correlative routine. That's what inference engines are, to try to determine where we're going to see the market move forward. Now, what I did is I asked it basically from this day here, where you can see the lines start to originate, all the way through these bars to this area where we were just before the election. And I said, tell me what you see as the most likely probable outcomes. That's what I was asking it for. And it drew all of these lines, these little blue lines and yellow lines down in here. You can see, if we look really close, you can see all these little lines in here telling you that this is what the market's likely going to do, indicating a potential breakdown here, potential breakdown here, potential low price down here, and then immediately after the election, rolling back up to the upside. You can see I drew these lines. The green line is what I called the upper channel. Could have been more aggressive, but I really didn't think the XLV was going to rally straight up, 9.5% right after the election. So I looked at the lower channel and predicted the red level here, indicating an upward. Then I looked at the green level and predicted an upward channel here. Then I went to kind of the middle area and predicted this pink level here. So now, what's happening in the healthcare sector is pretty interesting. So we come over here, forget about XLB or XBI for now. Look at what happened down here. This is XLV daily. Okay. This was the election right here. November 2nd is when I did the report, right on this bar right here. And we expected to find some low around this 144, 145 area. That's what the ADL system had predicted, roughly in this area. We would find a low. We're deeply below the low right now. Okay. We are really 2, maybe 3% low off of that. And remember, we're looking at a move in reality come end of the year, roughly right in this area, at potentially being 155, 156 or so. So we're looking at a move here for XLV to be moving up into this 155, 156 area, up maybe 9%, maybe 10% from where we're at down here near this rally. We're looking very solid for a reversal rally right now, moving back up into this area. I think this is going to be a deep V rally. In other words, I think it's going to be down, roll, maybe find some resistance, and then roll higher. So I think you're going to be looking at what's called a deep V rally. This will end up being our flagging pattern, moving up to here of the excess phase peak pattern, running into some consolidation here before we attempt to move higher into the end of the year. Now, look here also that near the end of the year, we have this is actually out in January, February over here. We have the potential to be up in the 162 to 165 area. So, in reality, we could be looking at a move up into this area right here. Very cleanly back up into that upper channel. So, what's interesting is, and again, I have a lot of resources for traders, and I use all of them. So, one of the resources I have here is called the TT scanner. And this is the 5-minute TT scanner chart. You can see we're getting all these green thrusting patterns here. These are all positive in the markets, and we're going to start to see these shift back up into green over the next 10 or 15 minutes. We'll see how it plays out. But notice what is long here, XBI. And now we come over here to the 15-minute chart, XBI, new long trigger, and we have no others. I'm focusing on the 5-minute and the 15-minute simply because I want to point out that as I started here, healthcare, this is biotech, looks like it's setting up a very solid, really solid bouncing type of a deep V low. So if we look at this in comparison to what would happen with XLV, you've got the same type of structure here. Now let's come back over here. Let's take a look at this channeling. So we will, and again, I try to teach traders to use resources that are clean. So I can come right off of these lows on a channel, right? Rejection, rejection, rejection. Come right into this area. Copy this. Try to drag this right up. And I'm looking at these upper levels, carrying this right down over to here. Now I can hypothetically come down to these levels or this level and see how these play out. This actually plays out right here. And this I will highlight playing out right here off rejection. So come to this one, extend it. How did I do that, guys? What did I look for? I looked for rejection. See how this bar comes down in a downtrend, moves into rejection right here, then comes down, attempts to break to new lows, does break to new lows briefly right here, and then rejects. So I'm looking right at that rejection point, and I'm coming right across over here, looking at rejection points again. That's my lower channel. And then I just copy that channel and I look for rejection. Coming up here, rejection. Coming up here, rejection. Up here, rejection. gap through the rejection point up to upper resistance. We can mark this a little darker because it's upper resistance. Came back down, rejected, came back down, gap through the rejection point into this lower channel, and then rejected again. Right up into the rejection point, continue to reject, retested. So what I'm looking at with this, guys, is I'm trying to see where price fails. Think of it as failure. And what I believe is going to happen here is we're going to be looking at a good solid rally in XBI and in XLF and potentially other healthcare sectors. This is a 12% rally here. Looks very healthy to the upside, in my opinion. And again, the trigger data here shows that we're getting, this is again the 5-minute data. XBI got a new trigger. This is 15 with a target of 47, 94.75 and 95.52. Very solid rally. And we're looking at a nice solid move here. Same thing back over here with the 5-minute. Now look at all these longs setting up. So these are intraday. They roll. XLB, XBI, FDN, and XAR. So let's come over here, take a look at XAR. Good solid rally intraday. That was on a 5-minute. Interesting chart, aerospace and defense. So 5-minute here, we're getting into a rally phase. You can see it's rallying upward. Likely going to move up into this channel. You can see again the rejection right across here. Coming right across roughly here. And we would be looking potentially at a move from this level up into the 167, about 0.5%, 84 cents. Come back over here. We're looking at FDN. Dow Jones Internet, 5-minute breaking up to the upside. Let's take a look, try to get some kind of a range. Okay, the deep lows I can't really rely upon, so I'm going to come back over here across these highs, across this rejection. Doesn't quite line up the way I want, so I will move this to here into a rejection point. And then I will come down to these lows, roughly right into that area. And we're looking at a potential move up about $1, about 0.4% on this 5-minute chart rallying higher. Remember, these are just 5-minute charts. I'm just showing you what's going on over here off these triggers. XLB, we have that new trigger, and XBI. So this is basic materials, XLB. Let's take a look at XLB. And here's our trigger. Looks like I've drawn some things on it. So you can see we've gotten a little sideways into a downtrend. And we are rolling downward. We got a clean breakaway. Look at that clean breakaway, guys. Really, really solid. Okay. Breakaway right here. We're looking for a higher roll. We would need to obviously get above this level here. Call this resistance. But again, very solid rally phase here in a breakaway. And again, XLB is part of my research. Let me find it. XLC, XLB. So XLB was slated to move down to around 90, 88, 90 on a low, and then rally back up into December around 89, 86, 87, 88. Sorry, 96, 97, 98, maybe a little higher. We come in here, we got down to 90.84 off a low, and now we're rolling upward. To me, this has a very good chance of rolling up to this level up into the 95, 96, 97 area. Pretty much that type of a move. Now, granted, that is going into January and February of next year. So remember, we really, if I were to draw this more efficiently, so here's December, we are going to be moving more so like this, potentially. Big, solid, rolling rally up to 96, 97, based on my predictive modeling, and that's about a 5.5% rally. Now remember, this is the chart. This is the predictive modeling that shows us what was likely to happen. So right over here, you can see right over here, it predicted that we were likely to come down into this, I'll drag it over, into this 88 to 90 area, find support through December, and then begin to attempt to rally back up. Eventually, you can see this downward trigger loses all of these bars. They eventually dissipate, and we roll back up into this upward trending, up into 98, 100. So as we stay in this lower channel over the next 30, 35 days, we're going to have this rolling basing opportunity for you to be able to potentially buy, wait for this to move into edit mode, potentially having a chance to buy into deeper lows, trying to catch this rally phase to the upside. And that's probably going to come mid-January. Okay. So again, looks very promising, really looks extremely promising when you look at the data. And this predictive modeling is something I don't share very often. So, you guys are kind of getting a special look at the predictive modeling system. I can do this any chart, any time frame, anything. In fact, if you guys remember years ago, back in COVID, when oil went down below zero, I actually predicted that move almost to the week. I mean, literally, I had claimed 4.5 months prior that oil was going to collapse down to below $14 a barrel, and I predicted that it would happen in the month and almost to the week that it would happen. And everybody wrote to me and was like, what are you thinking? What are you doing? Oil down to 10, 11, 12, below $14 a barrel. Are you crazy? You're nuts. How can oil go from 60 down to $14 or less a barrel? Well, you know what? That week that I predicted it to happen, oil went below zero on the futures market. Okay. I mean, literally collapsed. And it's because of this predictive modeling system that gives me the ability to see into the future. So, yes, I have specialized tools and I use them. And I'm lucky that I'm a programmer and I can build whatever I want. Okay. So, the idea here, guys, is we're looking for some real strength to build out of this anomaly event. So, give you an example. I come in here, look at the QQQ here. Here's the QQQ. Here's the predictive modeling saying we're going to go down to about 460, 470 on the low. We come over here, take a look at the QQQ. We go to daily. It says that we're going to go down to 460, 470 potentially. I've drawn that right over here so you can see it. This is the 460, 470 zone right in this area. We are looking at a breakdown anomaly event moving into this area, and it looks like it's going to set up fairly quickly. You can see these are weekly. So 1, 2, 3, 4, 5 weeks out, maybe 460, 470, maybe struggling in this area out until this end of December before we revert very strongly back up to the upside. Give you an idea of what is likely to happen. Now, this is why I believe we're getting into this anomaly event and why you need to prepare for a pretty strong downward move here. We'll see how it plays out. But again, the purpose of this was to tell you this video that XLV and the healthcare sector looked like a very solid rally phase, getting ready to go. So get ready, guys. Talk to you later.